So when you own this for clients, like you've been buying it for years. You're in this a long time.
Yeah.
You'll still buy it for like a new client that comes in tomorrow. You'll give them their allocation to it.
I would.
Okay.
I would.
How do you make the decision to stop? Like when a stock has just gone too far? Because I always struggled with that.
It's a good question, man. I think for us at this point, and it again, we're early stage. We're still trying to figure out this model. But I think, obviously we're not trying to time the market. We're ultimately trying to see what's the average cost in, and evaluating that and looking at our trades, but thankfully we haven't had to make that decision yet.
Okay.
But it's coming.
You haven't had a stock that went up so much that you still want to hold it for some clients, but not add it for new clients.
Right. Well, let me correct that. NVIDIA is one of them.
How do you buy that?
You can't right now.
But how do you sell it? I deal with that all the time.
Yeah.
Like I can't buy it.
Yeah.
Because I just watched it go up 1,000%, 1,200%.
Exactly.
But I'm definitely not selling it.
Yeah.
Now adding the tax thing for clients, that's just my own problem. But now think about a client's tax situation. That also has to it shouldn't factor into your analysis of the stock.
Right.
But in wealth management, it has to factor into the advice that we're giving.
Right.
So to me, that's very tough. Hopefully you have some losses in some meme stocks. By the way, AMC very quickly cut in half from its high, I think, right?
Oh, really?
Pretty close.
Let me pull it up.
What happened today?
It bounced today.
Did it?
Not cut in half. Sorry. It was 72 and it's 47.
It's flat today.
Everybody's fine, ladies and gentlemen. AMC is fine. Calm down.
Up.
All right. So do we have any others in there?
Nope.
Nothing else on stocks. All right. Let's get into this first thing because I thought this was really interesting. Retail investors power the world. There's a Wall Street Journal article to that effect, and basically record cash inflows. Individual investors plowed $28 billion into the U.S. stock market just in June alone, and that seems to just keep going and going and going. What'd you guys take away from this?
I mean, my thoughts are, man, it's the environment. This is an environment. Rates are super low. People are home. They have nothing else to do.
Still. 15 months later.
We're talking about returning people to work in the fourth quarter of this year. All right, so 20 months, dude, makes a lot of sense to me. I think it's great for the market. I love it.
10 million new brokerage accounts opened in the first half of this year. There were 10 million in all of 2020. So if you thought the meme stock thing was coming to an end, it might be starting.
I thought 2020 was the year of the retail investor, but apparently it's 2021. I'm curious to hear, why do you love it? Because I feel like that's a take that's not so common.
So I love it in terms of just engagement, right? So even talking to people, talking to family, cousins, uncles, people I went to school with that had no interest in this 6 months ago, 18 months ago. I love it from that perspective. There's other issues I understand, but for me, that's what I like.
What's the first thing they ask you about or tell you about? Probably a trade they're doing.
Right.
Okay.
What is AMC? Why is it going down? Why is it soaring?
What is this stock I just put $50,000 into? Can you explain?
What is an option?
You know what this is?
Right?
You know what this is disrupted though? The shoe shine boy indicator. Remember, I did a post in June of 2020. I was in my office and literally my plumber came into my office and he saw that I had some charts on my screen and he said, "You trade?" So I just said to him, I said, "All right, what do you got? Show me your phone." So he took out his phone and he goes, what did he say? "I have $100,000 in the market and I have no freaking clue what I'm doing." It was something along those lines.
He now has $1 million.
And it was exactly.
Still no clue.
He bought Kodak. Like,
really?
And but my point is, at any other prior point in history, a professional investor would have seen that and been like, "I'm out. I'm going to cash."
Right.
That was like,
it doesn't work anymore.
It was a year ago. It was like 40% ago.
You know why it doesn't work? Because when you have 10 million new brokerage accounts opened,
everyone's a shoe shine boy.
Then everyone, right.
Yeah.
Like if the indicator is everywhere, it's not the indicator anymore.
Right.
So what's interesting is that these people, like, some of them are just purely speculating, gambling, but a lot of them are doing real work and they're finding new stocks. Like, for example, the journal was saying that individual investors in the last 2 weeks sent these stocks soaring. I've never heard of these stocks. Maybe you guys have. Alfie, Marin Software, Iconics Corp, soaring 100% or more intraday. Have you guys heard of these stocks?
Never.
Never heard of them in my life.
Never.
No idea.
So the thing, like, it's so quick. Like, Robinhood has become like TikTok, where the speed at which information travels. Yeah, we had message boards in the 90s. I wasn't around then to be trading, but it's not like this.
This is the holy shit stat. Strategists with Bank of America estimate that if the pace of inflows continues at the same clip for the remainder of the year, equity funds will take in more money in 2021 than in the previous 20 years combined.
John, throw
That's
this chart up.
insane.
It's nuts,
I
right?
mean,
do we have that?
Insane.
No, but the question is, like, where is this money coming from?
Right.
I don't understand.
Well, I think some comes from the bond market, although there have been bond market inflows too.
But bond markets are getting tons of inflows.
Well, it's coming from the Fed.
But what does that mean, though? Like,
the money supply exploded. It has to go somewhere. It's not going to go in garbage bags. Like, it's not going to go under the mattress. It has to go somewhere. People were made liquid, and they're doing something with it.
I know, but these numbers are just
That's
gigantic,
insane.
though.
That's a powerful number.
But now
That's a powerful
it's not all going to Robinhood, and I think this is like maybe an important point. So Robinhood is $80 billion in assets, which is a lot, right, for a firm that was started a few years ago. But it's also 5.4 trillion still parked in funds that are ETFs or index funds. It's not like all of the money coming into the market is speculation. And I think I heard you and Ben talking about this. Like, Robinhood's impressive, but Vanguard is now over 7.5 trillion or something.
Yeah.
So it's not. It's hard to say like retail investors are doing this or retail investors are doing that. They're doing a lot.
Yeah.
They're doing all the.
And I think that there's also people that are putting the bulk of their money every 2 weeks in their 401k into these index funds, and also having a lot of fun playing the stock market on the side.
No doubt.
Like, there's people that are doing both.
How do you guys think it's affecting the industry as a whole?
I don't know. I feel like it's so early. It's hard to tell, and a lot of it's going where it was already going. Like BlackRock and Vanguard just keep getting bigger.
Right.
Well, I think that these people are, I don't know if they're impacting the industry, but certain parts of the industry they are. Like, what they're doing with some of these meme stocks and targeting the short sellers. Like, the game, if you were playing that game, this is a game changer. Like, there's no doubt about it.
No doubt.
You
Shorting
can't-
small and mid.
So let me ask you a different
You
question.
can't go on stage and be vocal with your shorts the way that you used to. So go ahead.
Yeah. How do you think it's affecting or impacting the future of advice?
These are not advised people.
I get it.
Yeah.
I get it, but maybe they would have been at some point.
Or they someday will be when
You got
the fun
it.
is over.
So that's, to me, that's the biggest question is, if you enter the market through the prism of, okay, this is a casino, can you unlearn that behavior? And I think you can, but it's going to be a long time before we know the answer to that question.
We're going to have to go into this Robinhood thing on payment for order flow. I think this is fascinating. The new SEC chairman is looking at, or director, Gary Gensler, who's now running the SEC, is going to rethink payment for order flow. Who's your custodian, by the way?
Schwab.
Okay. So your trades are free now for clients.
You got it.
Ours too. And Schwab gets payment for order flow. You know what I say? Good for them. It should cost something.
Right.
We're doing thousands of trades a month with Schwab. Should they do that for free?
Right.
I don't think my clients want them doing that for free. So I'd rather some Citadel pay them than me pay them. And if you tell me that's costing me a penny every time I buy Apple, who gives a shit?
Fine.
This is a non-issue,
Right.
in my opinion.
Are we going back to trading costs? There's no way.
No.
There's no way.
No.
How would we do
Right.
that?
How would we do that?
How would we do that?
Like, what brokerage firm would be able to say, this is a better deal for you now? We're going to go back to $5 a trade.
Yeah, right.
Investors would be like, what?
Good luck.
So, all right. So why are they reopening this wound? Is it just about the way Robinhood has conducted itself that's making them rethink the whole business model?
Absolutely.
Okay.
Absolutely.
Because there is an incentive here for Robinhood to push more and more client activity in areas where the payment for order flow is higher. And the only reason it would be higher is because it's a shittier trade for the end client.
Right.
We all understand that. But these clients are self-directed.
Right.
Nobody has it, right? Nobody has a gun to their head to do the trades that they're doing or the activity. So if we're just saying that Robinhood is mind-fucking them into doing these trades, I don't think payment for order flow is the way to solve that. So I don't know. What do you think about that?
Yeah. I don't think – I think it's a mute issue, honestly. I think it goes nowhere. Because I don't know what their alternative is in order to kind of move forward. in a way that makes sense.
This looks like a weird PR move for the SEC. Like they're dotting their I's and crossing their T's.
How funny would it be? Robinhood goes public, and the next day, we are now voiding the possibility of payment for order flow. We've decided that this is something that China would be able to do, I guess. What they just did to their what they just did to Didi. They said no more app. You can't even download the app in China the day after they went public.
It's amazing.
All right,
dude.
I don't think this is going to come. I don't think anything's going to come of this. In my research for this conversation, though, I didn't realize this. I don't know why. Maybe a lot of people did, and I'm just behind. Fidelity doesn't do payment for order flow, and we use them as custodian.
Well, I guess that's because probably unlike the other custodians, most of their money comes from the asset management business.
Right.
Do we think that Charles Schwab's asset management business is materially smaller than
Yes.
Fidelity's?
Yes.
We do?
Is it really?
Fidelity's fund families?
Yeah.
Yeah.
Huge.
Okay, yeah.
Their
You're right, that's a
401k
good point.
business, it's just massive.
All right, so we have assets at Fidelity, and they had to cut commissions to zero also, just to like keep up with what's going on. But they are not taking payment for order flow, which leads me to wonder: well, how are they planning to make money? Or
Fidelity does just fine.
I'm sure they're fine. Maybe they get more on margin interest, or a stock loan, or some of these other businesses.
I mean, I'm saying their asset management businesses. What is the Contra fund?
What are they custody? Do you know?
$500 million in fees. I'm making that up.
Right. So Robinhood, 80% of their revenue comes from payment for order flow.
That honestly sounds light. I thought it was more than that.
More than 80%.
Yeah.
That's a lot of money, though. It's billions of dollars. We learned. How much? They
No, it
did
was
$1 billion? $1 billion?
$1 billion in revenue almost in 2020.
So that's $1 billion that like 5 high frequency trading firms are paying them in exchange for access to their customers' orders.
Yeah.
But again, that seems okay to me.
Yeah.
If you're not
I don't
a
have
high,
a problem with it.
if you're a Robinhood client buying 8 shares of Tesla, who cares?
Who cares? If you really so up in arms about it, take your 8 shares to Schwab and direct your orders to the New York Stock Exchange.
Yeah, I'm with you on that. So I don't think anything will come of this. I don't think that we're going back. Historically, when a major breakthrough in finance takes place, you very rarely have the whole system revert to whatever it was before. So I wouldn't worry too much about this.